Okay, Bismillahirrahmanirrahim. Assalamualaikum and hi everyone. Today I would like to share one product that we provide in the Islamic finance perspective. First of all, I would like to introduce myself. My name is Nazato Farahani binti Fakurazi as the sales and the marketing consultant in the Bank of the FC. Okay, first of all, we need to know the definitions of the Islamic finance. The Islamic finance refer how the individual and the businesses raise their capital in the accordance of the Islamic principle and the Islamic law, which means Islamic law is a law that prohibits collecting the interest or riba. The Islamic finance also refers to the type of the investment that is permissible under the forms of law. Islamic finance also can be seen as the unique forms of the socially responsible investment. This sub-branch of finance is a burgeoning field. Accordingly, Sharia-compliant finance, which is halal, which means permitted, consists of banking in which the financial institution share the profit and loss of the interest in the underwrite. Of equal importance is the concept of the gharar. In the financial context, gharar refers to the ambiguity and deceptions that come from the sale of the item whose existence is uncertain. For the example that we make for the gharar if in the forms of the insurance, that could include the purchase of the premiums to insure against the something that may or may not occur. Derivatives used to hedge against the possible outcome are another type of the gharar. This equity financing of the company is permissible as long as those companies are not engaged in the risky business. Prohibited activity include producing the alcohol, gambling, and making the pornography. Islamic financial institution also have the various risks such as liquidity risk, and then we have the legal risk, and then we have the operational risk, fiduciary risk, and takaful also commonly relate as the insurance, as the Islamic insurance. The model that used in the as the takaful Islamic insurance is al-mudarabah and the al-wakalah. We know about the definitions of the Islamic finance. Now I will proceed what the product that I would like to share. The product that I would like to share is the home loan or home financing based on the Sharia concept, which is known as the Aman Aji. We commonly use as a BBA. Home financing is based on the deferred payment of the Sharia concept. It is a modification in the murabahah, cost plus contract. The product is received instantly while the price and the profit is paid in installment over the long period of time. BBA is in term generally used in the Malaysia and the Brunei and is known as the Bai Mu'ajjal in the regions of the South Asia, while in the Middle Eastern country is known as the Al-Bai Al-Murabaha. This facility of the BBA is provided by the Islamic bank to enable the home purchaser to pay the cost of financing. The bank purchase the asset cash from the vendor and then sell it on the credit basis to the customer. The selling price, which is the cost plus the profit, must be agreed upon the concluding the contract between the customer and the bank. The bank is liable for the liability and all defects until the ownership is transferred to the customer. The transfers to the customer. As a baby, it have the benefits. When the customer purchase this product, they will get the benefits. One of the benefit is no lock-in period or early settlement penalty for financing. In the banking world, there is a lot of effort to on the part of the customer for a particular financing, and home financing is one of them. The process can take 3 until 9 months and involves a lot of people, and it's natural for a bank want to earn the income as much as possible, as long as possible from the customer. That will not happen if the customer settle yearly. Okay, the benefits of the BBA number 3 is the selling rate price protections. While many years ago, this feature is missold by the many salesperson as being the oppressive and expensive. With the current climate of the changes, this have instead become a competitive benefit for the Islamic bank. This means that the customer is not overcharged. Most importantly, the customer will not be charged more than the selling rate should be normal benchmark rate, increased to the above the ceiling rate. This provide the customer price protections against the high fluctuations of the benchmark rate. Some might say that there is no way rate will be breached the ceiling rate, but you look at the length of the financing product of up to 30 years, who is say the benchmark rate won't breach during an adverse economic cycle. So the customer should choose this product to in order they want to settle their home financing. Which is I choose the buy with Aman Anjil. The modus operandi of the BBA is the customer who want to purchase the house approach the bank for the financing, for the home financing, and then the bank will assess the credit worthiness of the customer and approve the request. And number 3, the bank will purchase the house from the developer and pay full amounts of the cash. And number 4 is the bank will sell the house to the customer at the markup price. And lastly, the customer pay the sales amounts on the installment basis. Okay, what is the difference between the Islamic home financing, which is BBA, and the conventional home financing that that's known as the conventional mortgage. Conventional home financing is the common forms around the world to purchase the house where the customer signs a contract with the bank which contain the scheduled payment to be paid by the customer over the specified period of time. The mortgage loans that provided by the commercial bank offer this product for the two group of the customer. The first is the commercial purpose and the second is for the residential purpose. The mortgage loan of the commercial real estate is used for the purpose of business, building or purchasing shopping mall, restaurant, hotel and corporate office, while the residential loan are for the general public users to purchase or construct a house. Meanwhile, the home financing according to the Sharia compliant is a financing a home form in a way that the principle of the Islamic law and its rule do not violate. Also, the program of the Islamic home financing does not involve the riba, usury or the interest, maisir, which is gambling, and the gara, which is the speculations or the contractual uncertainty. Generally, it is based on the equity partnership between the bank and the customer. In the Islamic home financing, the customer pay monthly rent of the home purchased to the banks on the portions of funds supplied to the purchase the home, and this portion diminished as the home purchaser pay to the bank to purchase the portions of the bank. The wealth and the incomes of the conventional mortgage financing is not distributed equally, and it creates the insecurity, stress and conflict. In the contrary, the share equity financing, which is in the Islamic finance, reduce the conflict, insecurity and stress and make equitable society. That's the difference between the Islamic home financing, which is BBA, and the conventional home mortgage or the conventional home financing. Thank you for lending your ears. And if you want to apply the product, you can call me or WhatsApp me for more details.